let's look at diverging regional growth outcomes. Economic data this week is dominated by the US. We have activity data from manufacturing and the services sector, inflation data, employment data, and also speeches from Fed members. If we think about Chris's video yesterday, where he talked about the ISM manufacturing data, we saw that move higher. We've also, when we're looking at the subcomponents, seen an improvement within new orders, so that's positive for growth. Higher employment, once again, positive for growth. But we've also seen the prices paid component fall, which is a positive for inflation. When we look at data that came out yesterday in the form of the JOLTS, which looks at the number of job openings within the US economy, we've seen that number be higher than what's expected. So once again, that could be a positive outcome for both growth with the unemployment rate lowering, but also the inflation side of things, where wages demanded by workers could also be lowered due to a higher number of jobs within the economy. And this is all moving towards stronger US growth. If we look at more timely estimates of GDP, such as things as the Atlanta Fed nowcast, we can see that the US is currently projecting to be at 3.2% growth for this quarter. Now, for context, that's much higher than long-term US GDP growth, which runs at about 2%. Now, if we compare that to what's happening currently within Europe, we're seeing that economic data is starting to fall and momentum starting to fade. That comes from things like political uncertainty. We know that France is going through their own elections, and we know that the US could put in tariffs from Donald Trump's policies. We're also seeing weaker domestic demand from Europe, but then also exports being hurt by weaker demand coming from Europe. And this is really impacting regions such as Germany. We've seen Germany post pretty low growth over the past several quarters. However, what we find interesting and important to highlight as an investment team is that economic outcomes don't necessarily drive market outcomes. So despite Germany having quite weak growth over those past several quarters, the equity market has actually performed well this year. It's up about 19% year to date. So that just highlights really how economic outcomes and market outcomes can be disengaged from one another. So thank you for watching today's video, and we'll catch you in tomorrow's episode.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.